did not invent steel, but he created U.S. Steel, the world's first billion-dollar corporation. He did not invent electricity, but he funded Thomas Edison and created General Electric. He did not build railroads, but he consolidated them, financing the modern rail system. J.P. Morgan did not create industries. He organized them. He brought order to chaos. He turned small companies into giants. He financed the Industrial Revolution. By the time he died in 1913, J.P. Morgan controlled more wealth than the U.S. Treasury. His power was absolute. He could make or break companies with a word. Presidents sought his advice. Kings borrowed from him. He was capitalism personified. This is the story of J.P. Morgan, the man who built America, one deal at a time. Let us rewind to 1837. John Pierpont Morgan is born in Hartford, Connecticut. His father, Junius Spencer Morgan, is a successful merchant banker. The family is wealthy but not extraordinarily so. Young Pierpont, as he is called, grows up in privilege but also in the shadow of his father's expectations. Pierpont's childhood is marked by illness. He suffers from seizures. He has a skin condition called rhinophyma that causes his nose to become red, bulbous, and disfigured. The condition worsens throughout his life. As an adult, Morgan's nose is so prominent that people stare. Children point. Morgan learns to be self-conscious but also defiant. He will not let his appearance define him. In 1854, at age 17, Pierpont is sent to Europe for education. He studies in Switzerland and Germany, learning French and German fluently. He develops a love for art and culture that will define his later years. But more importantly, he learns finance. In 1857, Pierpont's father, Junius, moves to London to become a partner at George Peabody and Company, a leading merchant bank. Pierpont joins him as an apprentice. London in the 1850s is the financial capital of the world. The British Empire spans the globe. Capital flows through London to railroads in America, mines in South Africa, plantations in India. Young Morgan learns international banking. He understands currency exchanges. He sees how capital moves across borders. He learns to assess risk. Most importantly, he learns patience. Big deals take years. Trust takes decades. But Pierpont is not content to stay in London. America is growing. Railroads are spreading across the continent. Industries are forming. Fortunes are being made. In 1857, at age 20, Pierpont returns to New York to represent his father's London firm. He opens an office on Wall Street. The timing is terrible. The panic of 1857 hits. Banks fail. Railroads default. The economy collapses. But young Morgan does not panic. He sees opportunity. Distressed assets can be bought cheap. Those with capital and patience can profit. Over the next decade, Pierpont builds his reputation. He finances railroads. He trades commodities. He arranges loans between American companies and European investors. His father's London connections give him access to capital that domestic banks cannot match. By 1867, at age 30, Pierpont is wealthy. But he is not yet powerful. That will come later, through a series of crises that will define his career. 1870s and 80s. America's railroads are a mess. Dozens of companies compete. They build duplicate lines. They engage in rate wars, slashing prices below cost to destroy competitors. Profits collapse. Investors lose fortunes. Railroads go bankrupt. J.P. Morgan sees the waste. Competition is destroying value. What railroads need is consolidation, cooperation, organization. Morgan begins brokering deals. He does not build railroads. He reorganizes them. He brings rival companies together, negotiating mergers. He replaces incompetent management. He restructures debt. His method is simple but effective. Create larger, more efficient systems. Eliminate waste. Restore profitability. Morgan's approach is called Morganization. It becomes his trademark. When a railroad is in trouble, Morgan steps in. He provides financing but demands control. He installs his representatives on boards of directors. He ensures discipline. By the 1880s, Morgan controls several major railroads. He sits on dozens of boards. His influence is vast. But Morgan's power creates enemies. Competitors call him a monopolist. Reformers call him a robber baron. Morgan does not care. He believes consolidation is necessary. Chaos serves no one. In 1885, a railroad war erupts between the New York Central, controlled by the Vanderbilt family, and the Pennsylvania Railroad. They are slashing rates, building competing lines, trying to destroy each other. Both are losing money. Morgan arranges a meeting on his yacht, the Corsair. He invites the Vanderbilts and the Pennsylvania executives. They sail into New York Harbor. Morgan locks them in the cabin. He tells them, stop fighting. Divide the territory. Set fair rates. Compete on service, not price. The executives agree. The war ends. Morgan's power is solidified. He is not just a financier. He is an organizer, a force for stability. But Morgan's greatest achievement is still ahead. In the 1890s, he will face the most powerful industrialist in America, Andrew Carnegie. The clash will create the world's first billion-dollar corporation. 1900, Andrew Carnegie owns Carnegie Steel, the largest steel producer in America. Carnegie is ruthless. He undercuts competitors. He expands capacity relentlessly. He drives prices down. Smaller steel companies are bleeding. They cannot compete. But Carnegie, at 65, is tired. He wants to sell. But who can afford Carnegie Steel? It is worth hundreds of millions. Only one man has the capital and connections, J.P. Morgan. Morgan sees opportunity. If he can buy Carnegie Steel and merge it with the other major steel companies, he can create a giant. A monopoly. A company so large it controls the entire industry. Morgan approaches Carnegie. The negotiation is brief. Carnegie writes a number on a piece of paper. $480 million. Morgan looks at it. He says, I accept. No haggling, no negotiation. Morgan knows the price is fair. Carnegie is shocked but pleased. Now Morgan must organize the deal. He buys Carnegie Steel. He merges it with Federal Steel, National Steel, and several smaller companies. He also acquires iron ore mines, coal mines, railroads, and steamship lines. Vertical integration. Control every step of production. In 1901, Morgan creates the United States Steel Corporation. U.S. Steel is the world's first billion-dollar company. Its capitalization is $1.4 billion. It controls 67% of American steel production. The deal makes headlines worldwide. A billion-dollar corporation. Unimaginable. Critics call it dangerous. Too much power in one company. Reformers call for regulation. But Morgan is unapologetic. He believes scale creates efficiency. U.S. Steel can produce steel cheaper than anyone else. Consumers benefit. U.S. Steel is Morgan's masterpiece. It is the culmination of his philosophy. Organize industries, eliminate waste, create giants. Morgan has built a company larger than most countries' economies, but Morgan is not done. He will soon save the U.S. government itself. February 1895. The United States is in crisis. The Treasury is running out of gold. The gold standard requires the government to redeem dollars for gold, but speculators are draining the Treasury's reserves. If the Treasury runs out of gold, the dollar will collapse. The entire economy could follow. President Grover Cleveland is desperate. Congress will not authorize a gold purchase. Cleveland turns to J.P. Morgan. Morgan travels to Washington. He meets with Cleveland and Treasury Secretary John Carlyle. Morgan proposes a solution. He will organize a syndicate of bankers to buy gold bonds from the government. The syndicate will provide $65 million in gold. In return, they receive government bonds at a favorable rate. Critics call it a bailout for bankers. Morgan is profiting from the government's crisis. But Cleveland has no choice. Without Morgan, the Treasury collapses. Morgan's syndicate delivers the gold. The dollar is saved. The crisis ends. Morgan makes a substantial profit. But he has also saved the country. This is the first time J.P. Morgan saves the U.S. government. It will not be the last. In 1893, Morgan had already arranged loans to stabilize the Treasury during the Panic of 1893. In 1907, he will save the entire banking system. Morgan's critics accuse him of profiteering. But Morgan sees it differently. He is providing a service. The government lacks the tools to manage crises. Morgan has the capital, the connections, and the credibility. He steps in when no one else can. By 1895, J.P. Morgan is the most powerful financier in America. He controls railroads, steel, and now indirectly the U.S. Treasury. Presidents come to him. He does not go to them. 1879. Thomas Edison invents the practical incandescent light bulb. It is revolutionary. But Edison has a problem. He needs capital to commercialize it. Electric lighting requires power plants, distribution networks, and manufacturing facilities. It will cost millions. Edison turns to J.P. Morgan. Morgan is intrigued. He sees the potential. Electric lighting will transform cities. But Morgan is cautious. He invests modestly at first. He installs electric lights in his own home and office, testing the technology. The lights work. Morgan becomes a believer. He provides Edison with substantial financing. In 1882, the Edison Electric Light Company opens the Pearl Street Station in Manhattan, the world's first commercial power plant. It provides electricity to 85 customers. The business grows. But Edison is a poor manager. He spends recklessly. He feuds with competitors. His company is chaotic. In 1892, Morgan intervenes. He merges Edison's company with a competitor, creating General Electric. Edison is pushed out of management. Morgan installs professional executives. General Electric becomes one of the most successful companies in history. It dominates electric lighting, electric motors, and eventually appliances, locomotives, and power generation. By the 21st century, General Electric is one of the world's largest corporations. Morgan does not invent electricity, but he organizes the industry. He provides the capital. He ensures professionalism. Without Morgan, Edison's ideas might have remained unrealized. This pattern repeats throughout Morgan's career. He identifies promising industries. He provides capital. He organizes companies. He creates giants: railroads, steel, electricity, telecommunications, international harvester. Morgan is the architect of American capitalism. October 1907. The Knickerbocker Trust Company, one of New York's largest financial institutions, collapses. Panic spreads. Depositors rush to withdraw their savings. Trust company after trust company fails. The New York Stock Exchange is running out of cash. If it closes, the entire financial system collapses. President Theodore Roosevelt is powerless. The U.S. government has no central bank, no Federal Reserve, no mechanism to inject liquidity. The Treasury Secretary, George Cortelyou, arrives in New York. He brings $25 million in government funds. But it is not enough. Cortelyou turns to J.P. Morgan. Morgan, now 70 years old, takes command. He organizes a series of rescue operations. He works 18-hour days. He holds meetings in his library. He locks bankers in until they agree to contribute. Morgan's strategy is multi-pronged. First, he stabilizes the trust companies. He forces the major banks to lend to the trusts, preventing further collapses. Second, he shores up the stock exchange. He raises $25 million from banks to provide liquidity to brokers. Third, he prevents the collapse of Moore & Schley, a brokerage firm whose failure would trigger a chain reaction. For 6 weeks, Morgan is everywhere, commanding, cajoling, threatening. He is de facto central banker. He decides which institutions live and which die. His word is law. By late November, the crisis is over. Morgan has saved the system. The economy stabilizes. But the panic of 1907 exposes a critical weakness. America has no central bank. Without Morgan, there is no safety net. What if Morgan were not there? What if the next crisis overwhelms even him? Congress takes note. In 1913, 6 years later, the Federal Reserve is created. Morgan's actions in 1907 prove that America needs an institutional response to crises. One man, no matter how powerful, cannot be the system's backstop forever. But Morgan's role in 1907 cements his legacy. He is the banker who saved America 3 times: 1893, 1895, 1907. No one else comes close. J.P. Morgan is not just a financier. He is one of the greatest art collectors in history. Starting in the 1890s, Morgan buys art voraciously: paintings, sculptures, manuscripts, rare books. He collects Egyptian artifacts, medieval relics, Renaissance masterpieces. Morgan's collecting is systematic. He does not just buy pieces he likes. He buys entire collections. When a European aristocrat needs cash, Morgan buys their library. When a museum sells duplicates, Morgan buys them all. He amasses one of the largest private art collections ever assembled. Morgan's taste is eclectic. He loves illuminated manuscripts from the Middle Ages. He collects works by Raphael, Rembrandt, and Vermeer. He acquires ancient Egyptian statues, Chinese porcelain, and Renaissance bronzes. But Morgan does not hoard his collection. He builds the Pierpont Morgan Library in New York, adjacent to his home. The library, completed in 1906, is a masterpiece: Renaissance-style architecture, ornate interiors, walls lined with rare books and manuscripts. Morgan opens the library to scholars. He wants his collection to be studied. After his death in 1913, his son, J.P. Morgan Jr., makes the library a public institution. Today, the Morgan Library and Museum is one of New York's cultural treasures. Morgan's art collecting reveals another side of him. He is not just a ruthless capitalist. He is a patron of culture. He believes wealth brings responsibility. Those who have much should give back. Morgan's library is his gift to future generations. Critics argue Morgan's wealth was built on exploitation. He crushed competitors. He profited from crises. But Morgan's cultural legacy is undeniable. The Morgan Library preserves treasures that might otherwise have been lost. April 1912. The RMS Titanic, the largest and most luxurious ship ever built, prepares for its maiden voyage from Southampton to New York. J.P. Morgan owns the International Mercantile Marine Company, which owns the White Star Line, which owns the Titanic. Morgan is scheduled to travel on the Titanic's maiden voyage. A luxury suite is reserved for him. But at the last minute, Morgan cancels. He cites ill health. He stays in Europe. On April 15, 1912, the Titanic strikes an iceberg and sinks. Over 1,500 people die. It is one of history's deadliest maritime disasters. Conspiracy theories swirl. Did Morgan know the ship would sink? Did he sabotage it for insurance money? The theories are baseless. Morgan had no reason to destroy his own ship. The Titanic's loss is financially devastating for his company. But Morgan's cancellation is fortunate. At 75, he is frail. He likely would not have survived the sinking. His absence spares him a tragic end. The Titanic disaster is a blow to Morgan's legacy. His company's ship, touted as unsinkable, sinks on its first voyage. Critics use it to attack corporate hubris. But Morgan's role is indirect. He owns the company. He does not design or operate ships. A year later, in March 1913, J.P. Morgan dies in Rome, Italy. He is 75 years old. His death marks the end of an era. The age of individual financiers dominating the economy is over. Institutions, not individuals, will shape the future. December 1912. Just months before his death, J.P. Morgan is called to testify before Congress. The Pujo Committee, led by Congressman Arsène Pujo, is investigating the money trust. The question: does a small group of financiers control too much of the American economy? Morgan, 75 and frail, takes the stand. He is defiant. Congressman, grill him. Do you control U.S. Steel? Do you control railroads? Do you have too much power? Morgan's testimony is legendary. He denies controlling industries. He says he organizes them. He provides capital. He ensures stability. He does not dictate. The most famous exchange comes when Samuel Untermeyer, the committee's counsel, asks Morgan about lending. Untermeyer suggests that collateral is the basis of lending. Morgan disagrees. Morgan says, "No, sir. The first thing is character, before money or anything else. Money cannot buy it." Untermeyer presses. "So a man you do not trust could not get money from you?" Morgan, "No, sir. Not on all the bonds in Christendom." This exchange captures Morgan's philosophy. Trust is everything. Reputation matters more than collateral. Morgan lends to men he trusts. He denies credit to those he does not, regardless of assets. The Pujo hearings conclude that Morgan and a small group of allies do control vast segments of the economy. The report recommends reforms, but Morgan does not live to see them. He dies 3 months later. The hearings damage Morgan's reputation. They fuel anti-banker sentiment. They contribute to the creation of the Federal Reserve in 1913, designed to decentralize financial power. But Morgan's testimony also reveals his worldview. He believes in personal relationships, in trust, in stability. He is not a schemer. He is an organizer. Whether his power is good or bad depends on perspective. March 31st, 1913. J.P. Morgan dies in his sleep at the Grand Hotel in Rome, Italy. He is 75 years old. He had been traveling in Europe, visiting art galleries and historic sites when his health declined. He contracted pneumonia. His body, weakened by decades of stress and work, could not recover. Morgan's body is returned to New York. Thousands line the streets for his funeral. Business leaders, politicians, and ordinary citizens mourn. Presidents send condolences. Kings send messages. J.P. Morgan is not just a banker. He is an institution. Morgan's will is read. His estate is valued at $80 million, roughly $2 billion in today's money. It is a vast fortune, but less than expected. Andrew Carnegie quips, "And to think he was not a rich man." Carnegie's point: Morgan's true wealth was not in dollars. It was in power, influence, and control. Morgan's estate includes his art collection, valued at $50 million. His son, J.P. Morgan Jr., inherits the banking empire. J.P. Morgan and Company continues under the younger Morgan's leadership, maintaining the family's dominance of American finance. But the elder Morgan's death marks a turning point. The age of individual financiers is ending. Institutions are replacing individuals. The Federal Reserve, created in 1913, centralizes financial power. Regulations limit the influence of any single banker. J.P. Morgan's legacy is complex. He saved the economy 3 times. He organized industries. He funded innovation. He created jobs. But he also concentrated power. He crushed competitors. He profited from crises. He was capitalism's greatest champion and its most controversial figure. J.P. Morgan's death does not end the Morgan Empire. J.P. Morgan and Company continues as one of America's most powerful banks. The younger J.P. Morgan, known as Jack, maintains the family's influence. During World War I, Morgan's bank finances the Allies. Britain and France borrow billions from J.P. Morgan and Company. The bank becomes the fiscal agent for the British and French governments. This financing helps the Allies win the war. In the 1920s, J.P. Morgan and Company is the most prestigious bank in America. They advise on major mergers. They underwrite securities. They are the elite of Wall Street. But the Great Depression changes everything. Bank failures, market crashes, regulations. The Glass-Steagall Act of 1933 forces banks to choose commercial banking or investment banking. They cannot do both. J.P. Morgan and Company chooses commercial banking. Their investment banking division splits off, becoming Morgan Stanley. Both firms remain powerful. But the unified Morgan Empire is broken. Despite the split, the Morgan name retains prestige. Morgan Guaranty Trust becomes one of the largest banks in the world. J.P. Morgan and Company merges with Chase Manhattan in 2000, creating J.P. Morgan Chase, the largest bank in America as of 2024. The Morgan legacy extends beyond finance. The Pierpont Morgan Library is a world-class museum. Morgan's art collection is priceless. His donations fund hospitals, universities, and cultural institutions. But Morgan's most enduring legacy is his role in creating modern capitalism. He organized industries. He stabilized markets. He provided capital when no one else could. Without Morgan, America's industrial revolution might have been slower, more chaotic, more destructive. Critics argue Morgan concentrated too much power. He crushed competition. He profited from others' misfortune. But defenders say Morgan brought order. He prevented depressions. He built companies that created jobs. The truth is probably both. J.P. Morgan was neither hero nor villain. He was a product of his time, an age when individuals could wield immense power, an age when capitalism was raw, unregulated, and ruthless. J.P. Morgan's life offers lessons that remain relevant today. First, organization matters. Morgan did not invent industries. He organized them. He brought order to chaos. He consolidated railroads, ending waste. He created U.S. Steel, achieving economies of scale. Organization creates value. Chaos destroys it. Second, trust is everything. Morgan's testimony to Congress was clear. Character comes before collateral. He lent to people he trusted. He denied credit to those he did not. Relationships matter more than spreadsheets. Third, capital is power. Morgan's ability to save the economy came from his access to capital. He could mobilize millions in days. This gave him influence over presidents and kings. In capitalism, he who controls capital controls the system. Fourth, individual power is dangerous. Morgan saved the economy 3 times, but relying on one man is risky. What if Morgan had failed? What if he had used his power for harm? America needed institutional safeguards. The Federal Reserve was created because Morgan proved individuals should not hold such power. Fifth, wealth brings responsibility. Morgan used his fortune to collect art. He built a library. He supported cultural institutions. He believed wealth came with obligations. Not all wealthy people share this view, but Morgan did. Sixth, monopolies are double-edged. U.S. Steel's size created efficiency, but it also stifled competition. Morgan believed consolidation was good, but consumers and workers often paid the price. The balance between efficiency and competition remains contentious. Seventh, crises reveal character. Morgan's finest moments came during crises: 1893, 1895, 1907. When others panicked, Morgan acted. Leadership emerges under pressure. Finally, legacies are complicated. Morgan saved the economy but also profited from crises. He built companies but crushed competitors. He funded culture but concentrated power. History judges him as both builder and baron. Both are true. Today, J.P. Morgan is remembered as one of history's greatest financiers. His name adorns one of the world's largest banks. His library is a cultural landmark. His role in shaping American capitalism is undeniable. Morgan did not invent industries. He organized them. He turned chaos into order, small companies into giants. He financed railroads, steel, electricity, and telecommunications. He saved the economy 3 times. He was more powerful than presidents, but Morgan's world is gone. The age of individual financiers ended with him. Today, institutions dominate. Central banks manage crises. Regulations limit power. No single person can do what Morgan did. Yet Morgan's lessons endure. Organization creates value. Trust matters. Capital is power. And with great power comes great responsibility. J.P. Morgan built America. One deal at a time, one crisis at a time. Whether he was hero or villain depends on perspective, but his impact is undeniable. Modern capitalism, for better or worse, bears his fingerprints. The man who controlled more wealth than the U.S. Treasury, the banker who saved America 3 times, the organizer who turned chaos into empire. This was J.P. Morgan, the man who built America.